Welcome to the C-Suite Series on Channelchek. I'm Michael Kopinski, the Director of Research at Noble Capital Markets. Noble is the source of all equity research on Channelchek and the source for small and microcap companies. In this program, we are featuring Golden Predator Mining Corp. The shares trade on the TSX Venture Exchange under the stock symbol GPY and on the OTCQX under the symbol NTGSF. Noble's expert mining analyst, Mark Reichman, a best on the street all-star analyst as surveyed by the Wall Street Journal and by Forbes magazine, will interview Janet Lee Sheriff, the CEO, and Bill Sheriff, the executive chairman of Golden Predator. In this program, investors should learn more about the company's flagship project, the Brewery Creek gold mine. What is the potential of this mine, and what are the upcoming milestones that we are looking for? And before I turn it over to Mark, I encourage you to stick around for closing comments. That's when Mark and I will discuss the key takeaways from this interview. Finally, if you would like to get Mark's research on Golden Predator mining, on channelchek.com, type in the stock symbol NTGSF in the search box in the top left section of the site. And with that, take it away, Mark.
Thank you, Mike. Janet and Bill, welcome.
Thank you.
Thank you, Mark.
Beginning with Janet, I wanted to start off by having each of you share a little about your background and how you define your roles at Golden Predator.
I am the Chief Executive Officer. I have served in this position for about 5 years. I came in rebuilding the company, had been involved as the Vice President of Communications and First Nation Relations. Prior to that, lived and worked in the Yukon for 25 years with all the First Nation groups and governments, worked with all 3 political parties. My background is economics, and I focus on not only running the company and building the right team, but I am very involved in our social license to operate and how that can help the shareholders and de-risk the project.
Bill?
Well, I'm a geologist by education and background, mixed in with a bit of prospecting and a couple of stints as a stockbroker and market maker. So kind of a broad background that I think fits the industry pretty well. Started out in gold for major companies, then went on to work on my own. Entered into the public markets with the uranium boom of the 2000 to 2007 timeframe, involved with Energy Metals, putting that together with Paul Matisek, and then went on to Golden Predator, and we've been working primarily in the Yukon since, and focused largely on Brewery Creek, and we've had great success there growing the resource, and it's good to see it finally starting to come to the forefront a bit.
Janet, what about the other members of your team, and how does their experience enhance the company's probability of success?
It's been a primary goal of ours over the past year to build the right team in order to put a project into production. It takes a diverse set of skills, and to that, we've brought back our Chief Operating Officer, Mike Mislowski. Mike is a mine operator. He's worked with Coeur and Teck around the world running mines. Extremely important in the development phase, construction, operations, but also in planning. Jim Hesketh is a vital part of our team. Jim is a professional engineer. He's operated mines in Montana, Nevada, California, and the Yukon. And importantly, he was with Rothschilds when they retired the debt at Brewery Creek when Viceroy closed due to low gold prices. So he came in with a strong technical understanding from the financing side of the project. Equally important, Jim has opened the restart of the heap leach mine in California. It's adjacent to a national park, very stringent regulatory regime, and understands how it is done successfully. Everybody that we've brought into the project has those types of skills where they know the project, so we can go as fast as we can and not have to re-educate and rely on corporate memory Ed Hubert is a former Deputy Minister of Environment in the Yukon. He's working with us, and he handled the temporary closure, financial security. We've got the same environmental people involved, really focused on that knowledge and how important it is to have all that team going forward as you want to put a mine into production.
Bill, would you please provide a thumbnail sketch of your flagship project, Brewery Creek, and the key components of bringing it into production?
Sure. Brewery Creek was operated by Viceroy back in the 1996 to 2000 time period, a time period with very low gold prices. When we took the project over in 2009, we began enlarging the resource that they'd left us, which was roughly 100,000 ounces. Been quite successful doing that. We've also gone back and looked at that leach pad, which, as I say, they never did crush. They did run of mine, which left quite a bit of gold in that pad. So we're actually looking at a two-phase approach to restarting production at Brewery Creek, one of which involves the crushing and reprocessing of the material on the heap leach pad, where there's quite a bit of gold left. The other involves bringing in freshly unmined ore and blending it with that, such that we can increase our overall gold production and take advantage of the rather healthy gold prices at the moment.
Janet, what are the key catalysts or milestones for the remainder of the year?
The key catalysts and milestones for the remainder of the year would be first, the mineral resource estimate that will come out in August of this year. That is being conducted by Gustafson Associates. The next milestone would be the initial restart study that we retained Kappes Cassidy to complete, and that will be out in Q3. And that will look at the initial plans to reprocess and crush the heap and start mixing in new material. And that will include a complete construction schedule and timelines for implementation. And then we have, by the end of the fiscal year, a study, feasibility level mine planning by Tetra Tech out of Colorado. And that will be to integrate into the full planning for the mining of the licensed area in the reserve trend that would be included in the resource estimate to be completed this month.
Bill, the company is expecting to release an updated mineral resource estimate shortly. Would you talk about the existing mineral resource estimate and how the updated technical report might differ, both in terms of what it encompasses and your expectations?
Sure. The existing mineral resource report was put out in November of 2019. It did not include the drilling from 2019, which most importantly was 130 some holes right in the reserve trend in the main area between Foster's, Kokanee, Golden, and Lucky. That is the heart of the reserve trend. There we made a concentrated effort to expand the limits of mineralization in those pits in an effort to try and tie them into fewer, larger pits. We'll wait and see what the study says, but we're optimistic that we've been successful at doing that. I think clearly you're going to see, more ounces added. We started off with roughly 700,000 ounces of indicated and 400,000 ounces of inferred, with about 500 of that in the general area I discussed with the Foster's to Lucky trend. Here again, I think you'll see both of those numbers increase. Don't have the crystal ball to tell you exactly how much, but most of our drilling, which has already been announced, and people can reacquaint themselves with those numbers in our news releases. It was good drilling, it was successful drilling, and I think you'll see that reflected in the resource estimate, as well as consolidating some of those deposits into fewer but larger resource areas.
So, Bill, is there anything you want to add with regard to the exploration potential of the property and opportunities to extend the mine's life over time?
I sure do. I could go on for quite a while here, but I'll give you the brief snapshot overview. And we've been at it for 10 years, and of that, probably 4 very aggressive years of drilling, taking the resource from 100,000 ounces roughly up to over 1 million of oxide. And we've still got undrilled geochem anomalies that are overlying principal known mineralized structures. And so we've got probably another 3 or 4 years of drilling targets laying in front of us, much as the previous drilling that we've done over the last decade. So that is just on the thrust-hosted reserve trend mineralization with the 3 different thrust faults that are parallel there. The real upside blue sky beyond that, and that's quite substantial in itself, would be the porphyry that's on the south end of the project. It's a little bit lower grade, roughly 0.8 grams per ton, but all the drilling we've done so far has not reached the depth of sulfide. We're in oxide still at 200 meters. The mineralization is very much more consistent, even though it is lower grade, so you'd have fewer grade control issues. And the column leach testing we've done on that has shown very good recoveries and consistent recoveries, so it may actually be quite an economic package for us. The important part is we've got about 80 or 90 drill holes in it on the western margin. It's open to expansion, and we've been able to identify this same syenite porphyry in the river some 4 kilometers away, and also 6 kilometers away outcropping on the project. Where we sampled it along the river, it had consistent values with the occasional one, higher grade and then a few lower grade, but generally in that 0.8 gram range. So, it represents a real potential, an enormous amount of blue sky, if you will. Obviously, that's not going to be proven out until there's a great deal of drilling done, but the target's there and it's large and it's clearly of a different age and a different type of mineralization than the thrust-hosted higher grade mineralization at the reserve trend that we're starting on.
And Janet, your company has developed some really innovative programs such as the Yukon Mint, the Elders in Residence program, and have a socioeconomic accord with the First Nations government. How have these programs benefited the company's stakeholders?
Our approach has always been that the community comes along with us, and we operate in their backyard, and if we have to conduct ourselves like good neighbors. And in doing so, it de-risks the project because you are focusing on engaging and involving people that will be directly impacted by the project. So we try to be very innovative in our approach, and very proactive, and look at engagement and consultation as very different things. We have a political process with consultation, but we engage the community. And we see this as ensuring that benefits stay local and that we address the concerns of the community and that they feel and actually are part of the project. And that de-risks the project by acquiring a social license. You get a quartz mining license, you get a water license, you get a social license. And they're all equally important in ensuring that if you don't deal with it up front, it's going to come after. So we view our role in coming in as equally important to the permitting process that's established through legislation.
And as a mining jurisdiction, what would you like investors to know about the Yukon territory?
I think the Brewery Creek project is a great example of the changes that have occurred in the Yukon over the past 30 years. And the pivotal document is the Umbrella Final Agreement, which really brought in the rights of First Nation governments to the process. And in that, the Brewery Creek was permitted under what's called CIA, Canadian legislation. Now there's Yukon legislation. So what you've seen is an evolution, and the process has had to evolve. I think the Yukon is well intended. They have had to adapt and develop technical skills within the government in order to be able to properly assess and take on financial responsibilities for it. So I think if I could give people one thing, it's that the Yukon is a maturing district. Though there's been mining there for 100 years, modern day legislation is new. But the wonderful part is the Brewery Creek is licensed, I apologize. And there are 3 mines licensed in the Yukon now. And they are really showing that they are interested in seeing responsible, and there is no other kind, responsible mining in the Yukon.
And Bill, how would you characterize the company's financial strength and liquidity considering anticipated expenditures?
Well, I think you've got to break that down into two factors. Number one will be contingent exclusively on the feasibility work coming out. And you've got to basically separate that from your exploration and your day-to-day expenses. So saving that, I'll come touch on it again. Largely, it's speculative until you get the feasibility documentation. But right now, in this kind of financial market, there's plenty of support for debt financing as well as equity financing, streaming, royalties. So we certainly don't want to look at the royalty end of things. We think that's the course of last resort for ourselves. But I think right now it's pretty easy to say with the healthy gold market we've got and the scarcity of projects such as ours with better than a gram per ton open pit heap leach in a first world country that we'll have a number of choices. And of course, the attractiveness of those choices will be dependent upon the results of the feasibility study. In terms of our day-to-day financing, we're quite well financed. We have 300,000 shares of Seabridge stock in our treasury, and we do employ an option writing strategy to increase income off of that. We view it as a core asset to the company. We're certainly all behind Seabridge and have a great deal of faith in their projects and are quite happy to hold the stock. In addition, we have probably just around $1 million in cash in the treasury. With the COVID restrictions and lack of field activity thus far this year, that's lasted us quite well. But obviously we'll be having to dip into some of the cash that we have on hand, as well as probably some of the proceeds from the option writing campaign to do a bit of metallurgical drilling that we have slated for September in association with that feasibility report that's coming up.
Janet, to wrap up, what differentiates Golden Predator from other mining companies, and why is now a good time to invest?
I think what differentiates Golden Predator from other mining companies is our licensed Brewery Creek project. That's the past producer. You're not seeing too many projects that are licensed for a restart that have over a gram per ton, that have over 1 million ounces indicated and inferred in a safe first world jurisdiction. With the rising price of gold, we see a great opportunity for investment in a project that has a reasonable timeline and reasonable capex to production following our feasibility studies.
Janet and Bill, thank you for joining us today.
Thank
you very much, Mark. Appreciate your time. Have a great day.
Mark, thanks for bringing this company to us. It's really interesting. It sounds like there's a dual track here, right? They have some processing that they can do to extract some gold. And I was wondering, maybe you can explain a little bit about that process. And then, of course, the actual mining. So can you just kind of talk a little bit about what is the process that we're likely to see now, and when are we expected to see this mine go into production?
Sure. So Brewery Creek is a past producing heap leach mining operation. It will be an open pit operation. And so what they're trying to do is update the mineral resource estimate, which is due out this month. And the first component will be they're looking at evaluating reprocessing material that's already on the heap leach pad left over from the previous operator. And so they've engaged a firm to do a study on that component. The second component will be doing the actual hard rock mining to put new freshly mined ore on the heap leach pad, going forward. And it'll all be rolled together in a feasibility study by year end. And so we're expecting that the mine would go into production in 2022.
Gotcha. And Bill was kind of mentioning a little bit about a blue sky opportunity. Can you kind of frame what the opportunity might be there?
Sure. Well, right now, like I said, this mine has operated in the past. It's fully licensed. They have permits. And so they're going to, the first, order of business is to mine from currently, permitted areas. And if you look at their existing mineral resource estimate, there are known resources in both permitted areas and unpermitted areas. And so what they'll eventually do is to try to extend those licenses to some of the areas where they don't have them currently and actually mine in those areas. Meanwhile, they've been doing a lot of drilling in 2019, which will be the basis for this updated mineral resource estimate that's due out in August. And then in terms of longer term, being able to extend the mine life, potentially, looking at higher grades. They've been doing a lot of drilling in areas that, where they have not, that are not included in the existing resource estimate. And he had highlighted some areas where there's some potential, porphyry opportunities, which would be large deposits but lower grade, whereas most of the material that they're currently will be mining is oxide material or located, closer to the surface, therefore being an open pit mine. So there is a lot of opportunity to grow, the resources here at Brewery Creek, and eventually, extend the mine life. But so that's what he's really referring to on blue sky opportunities. But of course, that would also be incumbent on, funding drilling and exploration programs.
And Mark, you asked questions about the liquidity, and it sounded like they have some options. What are you looking for in terms of the liquidity for this company and the ability to kind of move forward with their projects?
Well, he kind of broke it down into two components, which is, I think, is the right way to look at it. There's kind of your ongoing, day-to-day expenses, and along with the drilling program and funding these studies, they will have to. They're funding the mineral resource estimate update. They're funding the study on the reprocessing of the heap leach materials. They're funding, the feasibility study. And he mentioned they've got about $1 million, cash on hand. They also recently sold their 3 ACES project to Seabridge Gold, and so they received about 300,000 shares of Seabridge on that, in that transaction, and also retained a royalty interest in the 3 ACES project. But those 300,000 shares, I didn't check the price today, but last week, they were worth on the order of about $8 million. So I suppose that they could monetize those shares over time. But as Bill mentioned, and he has a background in investments and capital markets, the board authorized an option writing program on those shares. So that is going to provide some additional income. So they look pretty good financially, just, from a, handling their working capital needs. Now, where the heavy lifting will come in is once they have the feasibility study in hand, and they'll have a better handle on what the capital expenditures associated, with the work that they need to do on this mine. And that's where, they'll have to do some form of financing. And I think that Bill has mentioned probably they'll weight that more towards, some type of debt, project financing. But it's still a little early, to know exactly, just because a lot will hinge on the outcome of the feasibility study, which will outline the economics and everything else associated with the project.
Well, Mark, I really enjoyed this interview. Thank you for bringing the management to us. Greatly appreciate it. Thank you.
Thank you, Michael.